JJ the CPA here. Hope you're doing well. So two big things happened today, and I had a bunch of phone calls with you through jjthecpa.com, and I was going to run through very quickly some neat things that came up, questions that I had, answers that I came up with that I don't believe have been on any of my videos. And I've got a great one to share with you from our live yesterday. Buckle up. Here's the update for today, August 25th.
Yeah. JJ, the CPA is here.
All right. Hey, I got a little dash of everything. SBA FAQs, the Main Street Lending Program, some EIDL, PPP2, the PPP forgiveness, little dash on some tax stuff. Let's jump right into this. But real quick, if you are not a subscriber, please take a minute, click it. If you're going to get any value from this, do me a favor and become a subscriber. You know you want to be, and I really appreciate you. So today, the SBA came out with some new FAQs. Guess what? It's not even Friday. Normally, the SBA releases things on Friday. Today is a Tuesday, so we feel very special. It basically addressed three things. I'm going to do a video to go through it more in detail, but here are the three things. It talks about owners of the business that are less than 5% owners don't have to be treated like owners for the payroll costs. So if you've been following any of that, you know that owners have a special calculation for their payroll costs. They've said if they are less than 5%, you are not going to have to consider that employee an owner. Also, subleasing. So if you are subleasing, then the expenses you have that are then being covered, reimbursed by a sublease, you are not going to be able to then include the amount of the cost you're getting reimbursed for. So you're paying rent of $10,000 and then you sublease a quarter of your rent space and you get paid $2,500, you're going to only be able to include $7,500 of rent. Also, they talked about related party, okay? Boom. I think that this one is a knock, and this is going to affect a number of my clients. I'm glad we have the 24-week option, though. Related party rent is allowed only, here's what's key, to the extent of the mortgage interest. So I own an entity, and then I own another entity that has real estate in it. So if I pay rent to the entity that owns the real estate, I own both. I have common ownership with both. The only way I'm going to be able to include my rent as the PPP borrower paid to a related entity is to the extent of the related entity's mortgage interest on that real estate. Going to have a video specific to that. Also, it talked about this. Mind-blowing, literally mind-blowing. This is going to be the one thing I'm going to tell you that I have been, excuse my language, hell-bent on that you couldn't do. And the reason why is that the SBA came out and, in my opinion, made it crystal clear you weren't going to be able to do this. And they now seem to have opened up the crack to this allowance, which is this. If you office from home, they're indicating that you can use a fractional amount of covered expenses, a fractional amount of utilities, a fractional amount of the interest. Mind-blowing. I think that it is not really a big deal, even though it is mind-blowing, and here's why. This is for the self-employed. The self-employed, your forgiveness is based on line 31 divided by 12 times 2.5, which would be the same calculation that you have when you got the PPP loan. The only way the self-employed want to include interest and utilities is if you're not electing the 24-week period. I don't know any self-employed individual that it would make any sense to not select the 24-week period. So is it mind-blowing? Yes. Why is it mind-blowing? It's the first time throughout all of this that I'm going to tell you I was hell-bent that it was this way. And now the SBA is saying, you know what, we think we're going to allow it. So it's kind of the first time they've directly indicated how even though I feel like they are contradicting themselves. But nonetheless, I just don't think it really matters. Now, getting a lot of comments on this next one. So the Main Street Lending Program, 90 pages. New FAQs that came out today. They also have the FAQs on the not-for-profit for the Main Street Lending Program. Wow, 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 wow. I don't know why people are complaining that I'm putting these videos out. Not a lot of you are, but why are people complaining that I'm putting videos out? So let me just tell you this. Is it easy to get any loan? You're getting lazy, you just want handouts, you just want to sign a piece of paper and someone hands you $92,250 right? So if you got to work for a loan, you actually have to earn the loan, you got to qualify for the loan, you got to pay interest on the loan. Oh, well, that's not anything we want. Okay, listen to this. I've got 3 videos talking about the Main Street Lending Program, and I'm going to do another one that talks more directly at it. Now, I did have a couple of people give some constructive feedback saying that the banks don't like them, the banks aren't making much money off of them, that they are hard to qualify for, that it is based on credit. Okay, I knew all of that stuff. I still recommended you be aware of it. What happens when your house is on fire? Do you necessarily really worry about the interest? Maybe, okay? But if you're complaining about the interest, this is good news for you because it means your house isn't on fire. If you're pissed at the interest rate and therefore you're not going to do it, well, that means you're in good shape. If you're mad that you are being given an option to go get a loan, but it's not really good terms, then that's really good news for you. I'm being serious. Then your house isn't on fire because clients that have a house on fire probably aren't worried about the interest rate, right? You ever heard of people that need to go and get a loan to keep their businesses going no matter what the cost is? So bottom line is that on the Main Street Lending Program, they also had released, and I appreciate the comment for somebody that's in the biz, they have extended it to December 31st to be able to get to it. Let's be clear on this. The CARES Act came out with it. It's a $75 billion program. They've only loaned out $1 billion. There's $74 billion left. Yeah, must not be that easy to qualify for. Someone also did comment that you have to have at least 500 employees, according to the bank that they called. Not to be controversial over it, I can't find that anywhere. I went back through, looked at the FAQs. Each bank can come up with their own requirements. So the one thing you got to remember is that a bank isn't God, okay? The angels are not the reps that you're working with, okay? My best friends work, run, are officers at, and presidents of banks, okay? They're not God. So what's interesting is, yeah, I'm a CPA. I'm not in the lending institution. I'm not a banker. I get it. Would a banker know more than me? Most likely. What happened during PPP though? Okay? Bankers don't know everything, and the bankers only know as much as they know. They only know as much as what their bank does. So if your house is on fire and your bank says to you, well, you have to have at least 500 employees, doesn't mean that banker's an idiot. It means that bank's decided not to do the program. There's some 500. Now, I would appreciate if somebody goes into the fine print, like just show me that. It sounds like I'm challenging you. I'm not. I'm saying then show it to me. And the thing to note is that when you're talking about the Main Street Lending Program, there's no PPP left. Many businesses have got EIDL. Who else out there is trying to find another option for you that's part of the CARES Act, other than you can go get a traditional SBA loan? Who else out there is trying to find other options for you? So that's what I want you to remember. When I'm putting together videos for you, is to provide information. I have a client that is well below 500 employees, I think 26 employees, around 6 million gross, I don't know. They're moving forward with the Main Street Lending Program loan, okay? Now, talking today, I want to give a shout out. I'm not giving last names, so no one's going to know who you are. Shout out to Richard, Karen, Kath, Jesse, Eamon, Mike, John, Cindy, Brian, Rose, Mike, and John. Well, I guess I gave Mike and John 2 shout outs. I'm gonna bust through this really quick. So here's some meat to take away, at least from great questions that I got that I had to really talk out with these individuals. So they went to jjthecpa.com where you can sign up to have a phone call with me. You bet it was a plug. How much does it cost for you to watch this video? Exactly. All right, so listen, PPP2. This was actually from the live yesterday, the Monties. And that's their screen name, okay? And they were publicly, and you can find the comments and all that good stuff. But they asked about this, and this is this: how do you prepare for PPP2? Okay, I did do videos telling you, figure out what your financials are, know your monthly revenue month by month from January 2019 through July 2020, and soon to be through August 2020. Why? Well, PPP2 may be there may be a qualifier to it that requires you to show that you were affected financially by COVID, as in a reduction. Might be 50% as proposed by HEALS, could be 25%, who knows, because no one's doing anything today, right? Nothing is going on right now. But they asked, should they go get a new banking relationship if they had issues with the other bank? I love the idea. I said, yes, one better than that. Get yourself a relationship if you don't have a good one now, or you're with a big bank that kind of gave you the runaround, or you felt like you were in the mill. Get a new banking relationship with a smaller local bank, right? Bring it home. Credit union, right? So how do you know it's a credit union? I didn't think about this till PPP because I never had to think about it. You know it's a credit union because it's in the name. Sounds dumb and obvious. Well, maybe, but after 27 years, I never thought about, well, how do you know if it's a credit union? I just knew it said credit union, but that actually is the qualifier in the sense that it's in their name. Credit unions are beautiful. If they participated in PPP1, they're most likely going to participate in PPP2. Regional banks, smaller banks, the ones that have 3, 4 locations, they're just in your state, thumbs up. 2 things to know about that with PPP1, it ended August 8th. But with PPP1, when they funded it again, okay, this is back in April, they put another $310 billion. That was back in April. In case you didn't hear me, or you're just retuning in, there is no PPP open right now, okay? But when they put more money into it, they set aside $30 billion for the small credit union. They set aside $30 billion for the small business. So clue into this that with PPP 2.0, if it comes about, you bet your bottom dollar they are going to carve out dollars for those smaller lending institutions, have an existing banking relationship with them, open up a bank account, pop in, right? Have a cookie with them, wear the mask, right? Who's the branch manager? How you doing? Get an account, set up a business account. The point is I thought that was a great question. And when I had said, yes, do that, I had thrown in the flair of get with a smaller bank, not just a newer bank. All right, hey, if you're flipping houses, right? You're in the business of flipping houses, and you're gonna go get the EIDL, the Economic Injury Disaster Loan, which you get at SBA.gov, click on the yellow strip, really walk through this, looked at it in detail. Here's what I've determined, and actually who I was visiting with was very knowledgeable on this, had read a lot of stuff. We talked it through together. And we both came to conclusion, I agree with the conclusion that when you're flipping houses, your cost of goods sold, your COGS, C-O-G-S is what you have to indicate when you're getting the EIDL, would be the purchase of the real estate. You're flipping houses here. The purchase of the real estate, the materials to improve the real estate, and the direct labor to improve the real estate, okay? Insurance, right? Office supplies, mileage, travel, legal fees. That's not cost of goods sold. So this is a very specific example I thought I would share with you. Also, I talked with 2 different phone calls, and when I walked through with them how much payroll costs to include in PPP forgiveness. What was interesting is, and I'm going to have some videos coming out in the next week or so on this to really kind of drive this home, but know this. When you elect your covered period, if you're going to go with the 24-week, which I don't know yet any circumstance why you would not select the 24-week option when going for PPP forgiveness, because it gives you more time to include payroll and non-payroll costs. And whenever you hand in the application, which yes, can be before the end of the 24-week covered period, your requirements for PPP end for FTEs and the safe harbor for reduction in salaries. So the benefit of the 24-week is you get to include all the payroll from the standpoint of when you got your PPP loan up until the point, in essence, of when you put in your loan forgiveness, assuming it's not the full 24 weeks. But see, you're just putting all the payroll in. Hear me on this. Hear me on this. You're putting all the payroll that you had during that period. Okay? Let me be clear. You get your money, you select a 24-week period, but you put in your application here at 14 weeks. Okay? When you put in that application for loan forgiveness on PPP, you're going to put 14 weeks of payroll in it. You're just going to go, hey, here's my covered period. Here was my payroll. If you're going with the alternative payroll period, you're going to go, here's my alternative payroll period, and there's the payroll that I paid. You're not saying of the PPP that I got, here's the amount that I spent during the covered period from the PPP. What you're saying on that loan application is, here's the period of time. Here's the payroll that I had during the period of time. That's the payroll cost. That's the gross payroll. It's a state unemployment tax. It's the health insurance paid by the employer and the retirement benefits paid by the employer. Now, are there differences and limitations as it relates to those that are the owners, or if it's a partnership, an S and a C? Absolutely. I've done a bunch of videos on this. You can go to my playlists. I've got a PPP forgiveness playlist, and then I have a different PPP forgiveness playlist for the self-employed. You got questions on that, go to that playlist. I bet I answered them. But nonetheless, that really calmed these wonderful people's hearts, minds, in the sense of like, oh, well, then that's going to be really easy. Here's my payroll for the covered period of time that I'm going with. Let me be clear. The SBA made it crystal clear, black and white. Go look at it. You can hand in your PPP forgiveness application even if it's before the end of your elected covered period. You elect 24-week covered period by putting on the loan forgiveness application a period of time of 24 weeks. The end of your covered period can be later than when you're handing in the application for PPP forgiveness. When you hand in that application for PPP forgiveness, let me just really simplify it. Whatever payroll you had from the disbursement date to the date that you put in the loan application for forgiveness, you're just putting that payroll down. You bet your bottom dollar you got PPP for 8 weeks. You're putting 14 weeks of payroll down there. That's the SBA going, oh, easy. Total forgiveness if you work the numbers. Think about that. I'll have a more extensive video on that. Shouldn't be, it should bring a lot of relief to a lot of people on that. 3 things and then we're going to wrap up. EIDL on the self-employed. This one is huge. I'm so glad you stayed to here, okay? Those that left before here, okay, they're missing out on this one if you're self-employed. Self-employed EIDL. How do you know how much you can use of the EIDL that you get when you're self-employed for your pay, for you? right? So when somebody gets the economic injury disaster loan, this is the one that you get at SBA.gov. It's not the grant that I'm talking about. It's not the one that you get at the bank. I'm talking about SBA.gov, EIDL, okay? Self-employed. Schedule C filer is a self-employed. So this is not for the S Corp. This is not for the partnership or the C Corp. Okay, I'm talking about the self-employed Schedule C filer. Check it out. You take your 2019 Schedule C, line 31. That sounds super familiar. It is. That's the net income. That divided by 12 times 2.5, that's the amount of the EIDL, SBA came out and indicated in writing. That's the amount of your EIDL that you get to use for you. So when EIDL is provided, is loaned out, you're using it for ongoing operating expenses. Well, when it goes to an S Corp, the S Corp owner can continue to use EIDL to cover their salary, okay? Can't pay out distributions. But when you're at a self-employed, there is no salary and there are no distributions. Okay, even if you have a separate account and you feel like you're paying yourself, you're not. Even if you have a separate account and you feel like you're making a distribution, you're not, in the sense of the verbiage of the SBA, the verbiage of the IRS. Now, for you, it feels like payroll. For you, it feels like a distribution. Call it whatever you want. What I'm saying, for these purposes, self-employed, if you take your Schedule C, 2019, that net, line 31, divided by 12, 2.5 times 2.5, that's the amount you get for yourself, right? That's the amount that you can pull out and consider compensation to you, your payroll, your distribution, even though that's not actually what that is. It's just you getting money. So let me be clear on this. You get an EIDL as a self-employed. You figure out this number that I just told you over and over and over, that calculation. What? Line 31 divided by 12 times 2.5. Okay? You get $3,500, okay? For grins, pulling it out of the air, let's say that calculation of line 31, 2019 Schedule C divided by 12 times 2.5 is $1,500, okay? What that means of that EIDL, that $1,500, you can use it any way you want, it's yours. Okay? Is it considered compensation for unemployment purposes? No, because it's just a loan. You're going to pay back EIDL, period. It's a loan. But when EIDL, SBA, says you can only use it for ongoing expenses, I had a wonderful question a week ago with one of the calls that made me really dig into this. The question was, when you're self-employed though, how much of the EIDL can I use for me, right? You take a self-employed, it's like, well, how many ongoing expenses do I have? Well, there's the answer, which that is great news. FTEs, remember this, full-time equivalents. There is a couple of ways to figure out your full-time equivalent. Just remember the simple way. Now, if you got a ton of employees, you're gonna wanna go the complex way. Here's the simple way to figure out your FTEs when determining PPP forgiveness, okay? If they're full-time, right, they're a 0.1 for that payroll period. If they're part-time, doesn't matter how many hours they work, if they're part-time, they're a 0.5, okay? So you take all your part-times, 0.5, 0.5, 0.5, add them together, take your full-times, those are all 1 point, add them together, that's your full-time equivalents. Remember, on the full-time equivalents, when you're just talking head count here, okay? If somebody leaves on their own accord, they have no effect to your FTE count. If they're fired for cause, they have no effect on your FTE count. If you offered them a job to come back and they don't, then it's going to have no effect on your FTE. If they go on vacation for 6 months, you know who asked that. They go on vacation for 6 months and then they come back and like, hey, can I start working again? It's like, well, I mean, we don't have a spot here for you anymore, okay? No effect to the FTEs. The big thing to remember is that you do want to have this documented. Best to have a letter from them, something in writing, an email, something to document, because the safe harbors out of the PPP Flexibility Act allow you that you won't have to affect your FTEs and the headcount based on that. Why is that important? The reason it's important is that if you don't have a haircut, you don't have a reduction of your PPP loan forgiveness, you get to file the EZ PPP loan forgiveness application. And I'm telling you this right now, it is easy. Last, talked with three of the wonderful callers today, clients for the day, about S Corp. So know this, when you're going into 2021, if you're filing a Schedule C, and if for 2020, you're looking at net income of more than 30 grand, okay? This has nothing to do with PPP, has nothing to do with EIDL or Main Street or nothing for CARES Act, nothing. This is good old-fashioned tax advice to consider. Your Schedule C, if you're gonna look at 2020 and you're gonna net more than 30 grand, then for 2021, you need to look seriously at being taxed as an S Corp. Or you're going into 2021 and you're like, you know what, I think I'm gonna net more than 30 grand. And I hope you do. I mean, whatever you're netting, I hope it's the best year ever, especially for 2021. I know we've all struggled here in 2020. Why? Okay, well, I'll tell you why. I'm gonna put a link in here to the last two videos that I've done on this, okay? Now, one I did a couple of months ago, it was probably in the middle of the night, might be a little humor, might have a few voices that go along with it for those of you that have been watching for a long time. I did one here a couple of weeks ago, talking about both things. Here's why. When you file a Schedule C, whatever the net income is, you're going to pay self-employment tax on that. That's in addition to your income taxes. Self-employment tax rate is 15.3% in addition to your individual income tax rate. Let's just say for grins that your blended individual income tax rate is 25%, right? Which is not that hard to be in, an average 25% income tax rate. In addition to that, whatever the net income is on your Schedule C, add 15%. So collectively, 40% in taxes here. Okay, obviously there's a little complication to it, and that's what this is right here. If you elect an S Corp, and this is where many will say, as I travel around the country talking to wonderful other CPAs, EAs, tax pros, they're like, yeah, but that's the catch there. Okay. But most around the country agree with me that once you hit around 30,000 of net income on a Schedule C, that's when you're like, yeah, you know what? There is a catch, but it would be worth it to do that extra effort. The extra effort is you need to pay payroll to yourself when you're taxed as an S Corp. So if you're interested in that at all, you're a Schedule C filer, check it out. Know this, when you're an LLC, you can be taxed as anything. S Corp, sole proprietor, C Corp, partnership, okay? LLC means nothing for tax purposes. And why am I telling you that as well? Because the SBA in their last set of FAQs, the ones that came out a couple of weeks ago, indicated that when you're looking at an LLC, you ignore the fact that it's an LLC for purposes of PPP loan forgiveness, and you look at how the entity is taxed. If it's taxed as an S Corp, then those are the rules you follow for SBA loan forgiveness purposes. All right, hey, we covered a bunch of stuff. Boom, thank you for sticking all the way to here. Those of you that I've talked to, thank you for making my day. Those that I talked to in the last several weeks, you make it all worth it. I'm energized after talking. I had a ton of phone calls today. How many names did I list out? Ton of phone calls today. Energized from it. You're probably hearing it through. And then, I was going to tell you, if you have any complaints, okay, maybe someone could put the phone number in here where someone calls. It's usually on a bumper sticker, I think. If someone could remember, what's the phone number on the bumper sticker? I'm not sure. And I definitely am excited to let you know, hold on for 1 second, that, because I've gotten a few comments, and I'm at, we have a counter here, I probably can't see it, over 37,600 subscribers. Thank you so much. I've got here some gizmos and some lighting, and which is some microphone stuff. So I hear ya. Just know this: I don't do this for a living, as in YouTuber. You've made me a YouTuber. I love it, but I am a practicing CPA. I have an insurance practice. I've got a book coming out next week, by the way. So check out social media anywhere you go. JJ the CPA. My second book is Cracking the CPA Code. So check out social media. I go live for free, right, on Mondays and Fridays, 4 p.m. Central Daylight Time, Central Standard Time, whatever you want to call it. I'm in Oklahoma, whatever time zone we're here. And Friday, September 4th, 4 p.m., we're going to have a virtual book launch, right? So we are going to start announcing this Saturday how you can get the book, but we're going to have a special event with some special pricing. If you're on our newsletter list, I'm glad you made it to here. If you're on our newsletter list, look, because Tuesday, Amanda's sending out our newsletter, but in the newsletter, okay, which we don't send out very often, it's going to be a way that you might be able to be a part of the event on a Zoom, because we figured out how to do a Zoom live and have people come on with us, which we're going to be doing on September 4th, but it'll only be an invitation to those. It doesn't cost anything for you to be on this Zoom that we're talking about here, but only those that are on the newsletter list are we going to send that opportunity to. And you have to buy the book to also be able to get on the Zoom. What am I saying to you? I got a lot of stuff going on and I love it. I got tax deadline coming up September 15th. So for those of you that have a business and it's on extension, those business returns for 2019 are due September 15th. Okay, coming up. Third quarter estimated tax payments for those that pay estimated tax payments at the individual level, typically the self-employed, due September 15th. If you filed an extension for your individual tax return, due October 15th. And then, boom, we need to be doing some year-end planning. We're going to be into 2021 before we know it. I got a lot of stuff going on, and I love it. I love it. I love it. So for the 99.9% of you, I love you. Thank you for the encouragement. Thank you for being part of the JJ the CPA movement. I don't even know what the movement would be other than just putting out good information, trying to be positive unless Coach comes out, and it's even positive when Coach comes out, because what is Coach trying to do? Motivate you, right? So I love you. If you made it to here and you're not a subscriber, what is going on? What is going on? Click it. All right, hey, you know what's next? You've never met a CPA quite like me. Hey, thanks for tuning in. Love you. More videos to come. Lots going on. Talk to you soon. Thank you so much.